In this week's episode of the Brisbane Property Podcast, we are joined by Jayden Vecchio from Hunter Galloway. And Jayden's going to guide us through all of the government assistance and eligibility criteria associated with first home buyers, what you need to know to get into the market sooner. We hope you enjoy this episode.
Welcome to the Brisbane Property Podcast with your hosts, Melinda and Scott Jennison.
Hi, everyone, and welcome back to another episode of the Brisbane Property Podcast with Scott and Melinda from Streamline Property Buyers. And as I normally say, when we have a guest, it's always exciting to pick the brains and the knowledge of other people. So we've got a guest today, Jayden Vecchio from Hunter Galloway. Welcome.
Yeah, thanks for having me.
We're super excited about today's episode. And Jayden, thank you for sharing your time with our audience. And we're going to be certainly allowing you to share your knowledge as well. And for those that don't know, Hunter Galloway are a mortgage broking firm based here in the Brisbane CBD. So we're going to get a little bit of insight into, the types of clients that you help. And there's going to be an opportunity for you to share that with our audience as well. But just to start, can you give us a little bit of a background? Tell us about yourself and how your vision unfolded for your company.
Yeah. Well, surprisingly, sort of thinking about it, I've been in the finance industry for almost 20 years. So I started as a mobile banker with Bankwest, and that's where I got into what we do now, like helping people reach, their goals. But I sort of found quickly working in a bank, that structure, there's a big focus on profits, but not a lot on what people actually need. So sort of got fed up with that around 2013, started my own business, initially focusing on commercial lending, but it wasn't my huge passion. But meanwhile, my brothers, Nathan and Joshua, were a bit of a finance family. So they were brokers at Bankwest and had similar frustrations. So, led us to sort of creating Hunter Galloway in 2015. So, and really our approach is, like you said, we're mortgage brokers, but we're probably more focused on educating people first. So similar to you guys, we want to make sure people understand the whole home buying process. And really our goal at Hunter Galloway is, to make the process of buying a home, buying investment property from the finance perspective, less stressful, because you just don't learn this stuff at school.
And you said, Jayden, you're with your brothers, so you all work together?
Yeah. So there's the three brothers in the business, and we've got staff here in Brisbane. But yeah, we all work pretty well together. It's kind of, people always like, oh, do you fight? No, they're twins. I'm not a twin. People get us confused. We all look pretty similar, but we all have the same sort of passion and get the enjoyment working together.
What I love about what you've just said, not only is it a family business, but you really do prioritize education and people and their goals over profits. And I think that, that's a really valuable business, direction, I guess you could say. One of the things that we've noticed is the volume of content that you also share, and especially on your website through your blog posts. I mean, if anyone needs to understand the process of buying their first home, and we'll leave your website details in the show notes, there's so many resources that are available especially to that first home buyer market, to guide them through the process. And today, I guess we'd really like to unpack some of that knowledge for our listeners, because on the Brisbane Property Podcast, we've never dedicated an episode specifically to first home buyers. So for everybody that's been waiting for this episode, finally, we're going to get all of the details that you need from someone that's going to expertly guide you through the process of what benefits are going to be available to you, what incentives there might be, and the things that you really need to consider before you make that first purchase. So obviously, one of your target markets are first home buyers. What do you enjoy most about helping first home buyers through the property buying experience?
Yeah, I think it's different to buying your second property. Your first home is it's such a huge moment. Like, you share it with your friends, you're excited, you find this amazing property that you want to tell everyone about. It's filled with so much excitement, but nerves and questions. So that's kind of the rewarding part. And that's why we really try and help people go from that moment of pure joy, oh my God, I found this place, I'm ready to make a move. But then that anxiety and uncertainty, and like, do I get a pre-approval first? Do I speak to a conveyancer? It's challenging, it's confusing. There's so much stuff out there. And that's why we've put a lot of energy into the website. And the part of it that we love is like that process, helping people see the transition from that sort of nervous, like, oh, I think I'm ready to buy a home, to like, you've actually got the keys in your hand. It's such an exciting process and a huge life milestone for everyone. It's the biggest purchase of your life.
Yeah, I totally agree when you say that, Jayden. It is a massive purchase, and you can make a mistake and it will cost you a lot in setting yourself up, especially the first home buyers. Or if you do it right, it can really set you up for the future, whether you're going to continue buying more investment properties or whether you upgrade to another home. So that first purchase is so important. I do encourage people to jump on that website as well and have a look at that, the ultimate guide for first home buyers. And I think, as you said, very mind-like as we are, we love to share information, share that content and help people. I think what it does is it actually makes people feel more confident. Mm. And when they're making that big decision, they feel more at ease because they're educated and they're informed. It takes away that level of stress. It's buying a home is stressful enough as it is. It's probably one of the most stressful things people do in their life. So to try and take that away and educate them and make them feel more comfortable, I think that's really important and great. Well, I think it's great that you guys do that as well.
If it's okay, Jayden, I'd love to sort of explore some of the government incentives or the government assistance programs that are offered to first home buyers. Now, just recently, we've had the new budget handed down. Not much in there for first home buyers, but there are still a number of incentives that are available to those that are looking to purchase their first home, not the first property. It must be a home that they're looking to move into. Let's explore some of these options. I guess we can start with the first home owners grant here in Queensland. Can you tell us a little bit about that opportunity for first home buyers?
Yeah, so the first home owners grant, it's a huge opportunity because it's sort of cash money from the government to buy your first home. So it's at the moment in Queensland, it's up to $30,000 on a brand new home. But the thing is, it needs to be a brand new home. It can't be lived in before. It can't be an existing house. So it's really the government's way, the state government's way of encouraging new construction and a bit of a boost there. So it's pretty impressive. I guess the restrictions and the criteria, like I said, has to be brand new. The house value or the land and construction value needs to be under $750,000. And the current grant, the $30,000 grant, is a boost. So it was traditionally $15,000. So it needs to be on contract signed between November 2023 and June 30, 2025. So it's a pretty awesome way to fast track your goals if you're buying a new home. So there's not a lot of that kicking around Brisbane at the moment, as you'd be aware. And really, like the limitations are, you have to build it. It's not on an existing property. So it's good for a pretty limited subset of people.
So when you say you have to build it, if something's built and you're buying it for the first time straight off the builder or the developer, that also classifies as being eligible?
Yeah, so if it's off the plan, so you might see a townhouse, an apartment, last couple of years there was a lot in Brisbane. There hasn't been a lot of inner city apartment construction lately, but yeah, if it's under 750,000, there's no income criteria. You can be a permanent resident and citizen, and you're buying that brand new home. As long as it's not been lived in before, it's eligible for the grant.
So just understanding property values here in Brisbane. So according to the most recent CoreLogic data, the median value for a unit in all of Greater Brisbane has just surpassed the $600,000 price point. So I'm assuming, given the eligibility criteria, there's going to be fewer people that can apply for this grant who might be looking for a house on its own block, given that houses now, median value sitting above $920,000 here in Brisbane. So it's a little bit restrictive in that regard. There are still going to be some locations, smaller blocks of land, a little bit further away from CBD in areas of Greater Brisbane where you can still be eligible for this. But it is important for people to understand $750,000 is the cutoff for the property value, regardless of property type. So if you're looking for a house, it's going to be a little bit further out, potentially because of cost of the land. Otherwise, units and townhouses are more likely to be the target property type. Would you agree?
Absolutely. Yeah, it was definitely very popular when we saw a lot of construction in a city like around Wollongabba, the Valley, maybe 5 or 6 years ago, where you could buy a unit off the plan that had never been lived in before. But like you said, there's not been a lot of that because of change in planning, costs, constructions, everything else. It's been further out. And then, like you said, trying to find something for $650, you're having to buy the land for 300,000-400,000, then try and fit a house on there. So it is getting more challenging at the moment in that price point.
Jayden, just for our listeners, and I'll ask some simple questions because obviously I'll actually admit straight away, I'm not all over the first home buyers grant. It's been a while since I bought my first home. Is there any means testing for that? So do they have to comply with that? Are there sort of hoops you got to jump through? I guess a couple of questions. Are you tested like means testing and that type of thing? And then can you buy existing homes?
No. So for the first homeowners grant, the $30,000, it's not income or means tested, but there is another grant. So the first home guarantee scheme. So this one is income tested. So this is a scheme that was introduced 2 or 3 years ago by the government to allow home buyers to get into a market with a lower deposit. So instead of potentially needing a 20% deposit to avoid lenders' mortgage insurance, you only need a 5% deposit. So it can help you get into the market a lot quicker because, the average time to save a 20% deposit is it's over 10 years. It's something ridiculous at the moment. So this is an amazing scheme. We've seen a lot of take up in the home guarantee scheme, but it is means tested. So this one has an income cap. If you're a single person, your taxable income needs to be under 125,000. And if you're a couple, your combined income needs to be under $200,000. So this one is restricted, but the good thing with this home guarantee scheme, the 5% deposit scheme, is that it can be on existing properties. So it doesn't need to be brand new. It can be existing homes, units, townhouses, house and land if you're constructing. But the big but here is the price cap is $700,000 in metro, like Brisbane, Gold Coast, Sunshine Coast. And if you're going regional in Queensland, it's $550 in Ipswich and further out. So again, like in Brisbane, if you're buying a house, like you're going pretty far out to get something for under 700,000. So the take up that we've seen here is probably more like your stepping stone home. You're buying a unit in a city, going to live in it for a couple of years, maybe turn it to investment property. This home guarantee scheme is great because you need a 5% deposit, need stamp duty. So, on a $700,000 home, instead of needing 140,000, you can get in with 60, including your stamp duty. So it's a great way to shortcut and get on the ladder a bit quicker.
Yeah.
Really makes sense. And I think that's why, this episode is so important for our listeners to really understand what options are available to them. So we talked about the first homeowners grant in Queensland. Now, that's the $750,000 threshold. There are no requirements based on means testing with that one, but you must buy brand new property. Must be by brand new. Whereas the second option that we've just discussed is the first home guarantee scheme. That is means tested. So if you're buying as an individual, your income is capped at $125,000. Otherwise, you're not eligible. Or buying as a couple, your combined income must not exceed $200,000. But the benefit there is that you can buy new or existing. Can you double dip if you're a first home buyer and you're buying brand new and you're eligible for the first homeowners grant in Queensland? Can you also, go through and purchase that property with the 5% deposit under the first home guarantee scheme? Just for our listeners, can you elaborate on that?
Absolutely. Yeah, you can do both. So I guess it's, the perfect situation where you get $30,000 from the government for a brand new home that's been built off the plan. But to meet the home guarantee scheme, the 5% deposit scheme, it needs to be under 700,000. So finding that around Brisbane or, under 550 in sort of the metro areas, is increasingly challenging. And hopefully in the next budget, we might see some revisions to this. There's even talks, there's a stamp duty concession of some changes around that because the price caps haven't changed in many years, which is making it difficult.
That was my next question. How long ago did those price caps change? Because off the back of COVID in Brisbane, we've seen prices escalate more than 50% over the last 4 years. So that's huge capital appreciation. So whilst we're seeing the prices of properties in both segments of the market, whether that be houses or units, it's just escalating month on month. But we haven't seen any change in those thresholds. So what that means is the options that are available for first home buyers that are looking to utilize these schemes, the options are diminishing almost monthly as the prices keep escalating. Would you agree with that assessment?
Yeah, absolutely. Like it's been a few years since they revised this. Certainly the first homeowners grant, that 750 hasn't changed for many years. So before COVID, it was that amount. So yeah, hopefully the government addresses this soon, because it's the same with the stamp duty concession in Queensland, which I think will go through shortly as well.
Jayden, if I wind the clock back, and Melinda and I are a young couple that have got together.
Winding back a while.
I've winded back a long while. I've already bought a property myself, and yet as a couple, we want to buy a property together. Is there any way we can actually benefit from the first home buyers? Obviously, if I've already purchased a property, maybe I've claimed that before, maybe I haven't. I'm not sure. There's obviously different scenarios there. Can you help our listeners understand, is there opportunity to do that as a couple?
There used to be. So for the first homeowners grant, specifically the $30,000 one, it says like if you or your partner has owned a property before, it deems you ineligible. So you're not eligible. With the first home guarantee scheme, so the 5% deposit scheme, if you haven't owned a property for 10 years and you currently don't own a property, you're also eligible for the scheme. So you still need to meet the other criteria, the income, the property price caps, etc. But the government did change this recently, just this most recent year, the home guarantee scheme, that just allows people, if you've been out of the market for 10 years, just an opportunity to get back in, subject to meeting the other criteria.
What I love is your knowledge in this area, and it just goes to show the benefits of partnering with people that will not only provide the finance and the solution that you need to make the purchase happen, but they'll educate you on all of these additional opportunities, I guess you could say, that are available to you, which will enable you to make a really informed decision. Because from what you've said and what you're describing, Jayden, it's probably a little bit confusing for anyone trying to navigate all of this themselves. So it is incredible that the service that you provide will also help those buyers to navigate through all of the complexities associated with these. And we've only been through a couple. There's more that we can discuss. So if we can move on, let's talk about another opportunity or another form of government assistance, and that's the First Home Super Saver Scheme. Can you talk us through this particular opportunity for first home buyers?
Yeah, this is another great opportunity, more for people that are planning. So the First Home Super Saver Scheme is a good way to leverage your superannuation to save for your first home. So you can't take out just super from your super account like you could during COVID, and one of the opposition's proposals is to do this, but this isn't allowed. The way the First Home Super Saver Scheme works is you make voluntary contributions. So you make extra contributions to your super, specifically for your home deposit. So these are called concessional contributions, and they get taxed at a lower rate. So for example, like if you're on a $60,000 income and you make a $10,000 contribution, normally you'd pay 32.5% for tax. But using the First Home Super Saver Scheme, instead of paying 32.5% tax, you pay 15%. So it just means there's more net savings going towards your deposit.
So really, it's a quicker way to save. And I think one of the struggles that many first home buyers have in today's market is setting aside those savings. There's always those temptations, isn't there? You can see that money building in the bank account. If you can touch it, sometimes it's tempting to use it. So this is a scheme that's designed to fast track the saving, but it stops the temptation of you looking at that balance accumulating and deciding, you know what, it's too hard. I'm going to go on that overseas holiday and spend it all at once. So I guess it's a way that that people can stay on track as well. But as you've pointed out, there's tax benefits associated with this scheme. You're going to save on the contributions that you would otherwise have to pay. So there's a tax benefit there. And it is a way to fast track the savings for your deposit because you're saving tax in that process. Can you help me understand, what is the uptake of this particular scheme compared to some of the others? Is it less popular or is it more popular based on your experience?
It just requires a lot more planning because you need to say to your work, hey, instead of paying me, $3,000 net, like I want you to take $500 a month and put that into the scheme. So it's definitely one of the ones that you want to be doing if you're planning on buying a home in 2-3 years, or if your listeners have kids and they're wanting to get into the market, like this is a perfect scheme for where you want to buy in the next couple of years because it is a bit of a slow burn. Like it does help you save quicker and get that deposit faster because at the end of the day, you're paying less tax and that then goes into your deposit. But it's not like you can just make it happen overnight. Like it's a slow and steady process.
So it's not the sort of opportunity that people can come to see you. They're ready to buy their first home and you can say, hey, have you considered this first home super saver scheme? Instead, it's the mums and dads out there who are listening to this podcast that have teenage children, children who are in their early adult years. It's the conversations that you're having with your children of that age to help them be aware of the options that are available to them, because the younger generation these days, quite often they're just not aware of things that they can do now, which will help them 5 years from now. You mentioned it's a sort of 2 to 3 year planning process. Imagine if you had a runway of 5 years and when you get your first job, you really start planning for the deposit for your first home. It is all about getting that education and that understanding up front. So what you're saying is people should be connecting with your content very early to learn some of these things, not just when they're deciding to buy their home.
Yeah, because there is a limit how much you can contribute every year. So you can only put up to $15,000 a year and up to a maximum of $50,000 in this scheme. So it's not like you can just turn it on, put all your deposit in there, get your tax rate down and suddenly buy a home. It definitely was designed as like a 2-3 year out from when you're buying, or like you said, further away where you sort of get to that maximum contribution, have it sitting there. And when you buy a home, you suddenly got $50,000 more in deposit go towards everything.
And you're not tempted because you can't touch it. So you can't pull it out and take it on that overseas holiday.
I know exactly what Melinda's going through her mind at the moment, because our eldest son has just turned 21. And I know what she's going to go home and have a conversation with him about now, Jayden. So he'll thank you for that. Okay. I'll give him your number and he can talk to you about it.
I'll make sure he reads some of that content on your website, because I think since he's been about 15, I've been drumming into him the importance of putting that money aside to save for the first home. And I think it comes from discipline and education and perhaps having a mentor that teaches these youngsters to really understand the importance of putting a small amount of what they earn aside, because once you are in the market, once you buy your first home, that is the gateway to future financial freedom, because not only does your home provide shelter, whether it's your forever home or just a stepping stone home, it's about getting into a market where capital appreciation will help you to grow equity. And from that equity, magic happens. From that equity, you can upgrade a home, you can build out an investment portfolio, or you can simply have a safety net knowing that should something happen, you've got you've got stability financially because you've got a savings plan effectively within property. So, I'm a big believer on the sooner you can afford to do so, you should be buying. The first property that we personally purchased was our own home, not an investment. And Jayden, our viewers know, our listeners know, my first property was purchased when I was 18 and Scott's was 15. He was forced to buy a block of land because his parents took some of his wage away and put that into property. So this is where we really, are passionate about educating youngsters about how you can make a difference by getting started early.
Jayden, I do want to jump on one, and I'm not going to get political on it, but I hate stamp duty. I really do. I think it's something that I wish the government would have a really good hard look at it. And we've talked about this for older people looking to downsize. There should be some sort of exemption for them because they could sell their 5-bedroom homes and allow someone else to move into it, and they're not going to chew into all their money. What about for first home buyers? Is there any way or concessions that they have for stamp duty?
Yeah, so stamp duty is one of the biggest upfront costs. Other than that 5% deposit, you still need the stamp duty in some instances. So in Queensland specifically, if your first home is valued for under $500,000, $500,000 or less, then the stamp duty is waived. So $500,000 or less, stamp duty is waived. And then for homes between $500,000 and $1 to $550, you get a partial concession. So you get a little bit of a discount up to $550. But unfortunately, and this is kind of where a lot of people are at the moment, from $550 upwards, it's the same for first home buyers as if it's your second or third home. So it's still expensive. So like on a $700,000 home, for example, like you need the 5% savings, so $30,000, but then you need another $26,000 or $27,000 just for the stamp duty to be able to get into that home. So it is a big cost, and it is definitely one of those ones that hopefully the government has a good look at this, because in other states, in Sydney, it's almost up to 900,000. Like properties are much more expensive there, but still it's a big difference between what we've got here in Queensland.
So if there's any politicians out there listening to this podcast, I hope there is, there's two areas that they can have a look at for stamp duty. And I think it's the older people and the younger people. And that will open up opportunity for people to get into the property market, because we do have a massive shortage at the moment of properties as well.
Of course, we've got to consider those thresholds yet again, as you've pointed out. So no stamp duty payable for first home buyers if the property is valued under 500,000. I mean, we really are only talking units in this market, or townhouses that might be further out. And then between 500 and 550,000 partial concessions. It's better than nothing, absolutely. But it also is a message to youngsters that you don't need a Taj Mahal to get into the market first up. Sometimes it's about making compromises to just get a foot in the market and use it as a stepping stone opportunity. You're not buying your forever home, but you're buying something that's going to create a position for you to leverage from, or to sell and upgrade in the future. And because it's a home that you're moving into, obviously there's not going to be capital gains tax implications. I just wanted to touch on one thing that we haven't talked about already, Jayden, because I know that there's a lot of people out there that think they can circumnavigate some of the rules around getting some of these exemptions or getting some of these grants, where they say, yep, this is going to be my home, but then they buy it. They don't actually move into it. What are the consequences of that if you're trying to circumnavigate, the rules?
Yeah, so there are some pretty specific rules. So for the home guarantee scheme or the 5% deposit scheme, specifically, like a situation we're seeing a lot now is, like, say if the property's tenanted. So there's people living there for the next 3 months, the tenants move out in September, like, can you buy it? So under this scheme, and even with the grant, you just need to move in and live there within 6 months of settlement. So if there's an existing tenancy, that's okay. 6 months is the key date. If it's beyond that, then it needs to be treated as an investment property, and you lose your concessions. You don't get the stamp duty, you don't get the grant, you don't get the guarantee scheme. So everything kind of is out the window. So equally, like, if you don't move in there, then it needs to be treated as an investment property. And I had an instance a few years ago when it was probably over 10 years ago in Sydney, when the government was doing the grants, and someone had claimed the first homeowners grant. It was $21,000 at the time. It was a fair while ago, but they never moved in, and they actually, the Office of State Revenue contacted that person and made them pay it back, because it's a lot of money for taxpayers and everyone else. So yeah, there are some very, very strict rules, and they are across it because it's pretty large sums of money, and that's it. But if you do turn it to an investment property in the future, like, as long as you meet the criteria, you've lived in there for 12 months, that can be common, and there's different ways around that, which things change in the future, and the government understands that, but definitely you need to move in there initially as your home.
And is there a time frame, a minimum time frame that people need to live in the property, or does that vary depending on the benefit that you've relied upon as well?
Different schemes, like usually it's 12 months, broadly speaking. And then you can change the situation. If there's been situations where people that have had to move overseas for work, and you can sort of apply for dispensations and speak to the government and make your case. But generally, the intention needs to be to move in there and live in there as your home.
So really, tax evasion is illegal, and obviously, if you're trying to bend the rules just to be able to get access to some of this government assistance, I think from what you've said, others have been caught. It's highly likely that you could be caught if you tried to bend the rules. So these benefits are in place for those that are doing the right thing, and of course, that's what we would be encouraging everybody to do.
Jayden, what else are you seeing? Is there any other schemes or anything that you're seeing on the first home buyers side of things?
Yeah, the other, I guess, for where people fall outside of these schemes. So if you're trying to buy a home in a city, or you're spending more than 700,000, then these schemes, or 800,000 for a home, like, they're not really going to suit, and you might not have a 20% deposit. So another option we're seeing first home buyers turn to is guarantor loans. So that's where you can use a family member. Usually it's a parent. Use the equity in their home to help you as the first home buyer secure the loan. So I guess think of it like this. Like, let's say you need a 20% deposit, but you've only saved 10%. your parents' home could cover the remaining 10% as equity from that home. So it makes it less risky for the bank, and it means you can get in with a smaller deposit.
And are you seeing that happen more frequently? The bank of mum and dad effectively, enabling or assisting the younger generation to get a head start in property?
Seeing it more and more, I guess, as a way to avoid that lender's mortgage insurance piece. Like if you're buying a home for $900,000, you only have a 10% deposit, you might pay $20,000 or $30,000 in lender's mortgage insurance. So mum and dad might step in, say, you can put your foot on the property, will help. At least mum and dad aren't having to sort of outlay cash, but there are risks. So, the risk is for the guarantor themselves, because at the end of the day, if the first home buyers, if I was buying a home as my first home, if I can't make the repayments, then my parents' home's on the hook for that 10% their property's secured by. So if the bank sells my home at a loss, then they're going to tap on mum and dad for their equity or help, try and get that money.
You want to make
recovered,
sure
basically.
if you are relying on the bank of mum and dad that you do have the capacity not to let mum and dad down, because they're doing you a big favor by tipping in that equity. So, don't make it, don't abuse that situation and go on the overseas holiday and then not meet your repayments. I think there's a responsibility that, you'd go into those arrangements knowing that, everybody's effectively working together for the benefit of the family in that instance.
Jayden, I know you said it's a family business. I'm just going to jump off track a little bit here, and obviously you're approachable, and when people want to come and have a chat to you, you're a local Brisbane boy.
Yeah. So grew up here, in Albany Creek on the north side, and sort of lived here most of my life. So yeah.
And you follow sport?
Yeah, Broncos and
Broncos. Okay, interesting. And coffee. Do you drink coffee? And what type?
Yeah. Usually, I like a good Italian coffee. Actually, it's my background. So yeah, either short black espresso or long black. Not a lot of milk.
I thought it'd be something like that with that Italian background that you've got as well. So, okay. So if anyone comes to have a chat to you, they should be wearing a Broncos jersey and bringing in nice Italian coffee in. Very good. What are the biggest mistakes you see, mate, for first home buyers?
Yeah, I mean, probably. The good thing is, I guess like you guys too, having been around for a bit, you've sort of made a lot of mistakes myself. And one of the mistakes I've seen first home buyers make, and probably even more investors, is over leveraging. So, borrowing too much. And I did that pretty early on in my journey. So I sort of had my first home, thought I was going to get, be a bit of a mogul, bought an investment property. And it was around 2009, 2010 when interest rates started going up, similar to the current environment, but at a 8, 9% sort of rate. So it was a lot more expensive. And I really overstretched myself. It was at the point where couldn't afford a heater. I was borrowing from a friend. It was uncomfortable to the point that I had to sell the investment property. I barely recouped my costs. But it taught me a pretty important lesson that cash flow and having that buffer is king. So even now when we sit down with people, we say, well, when you move in, we need to aim to at least have sort of 3 months, ideally 6 months in repayments as buffer sitting there, just in case. At the moment, rates look fairly stable. It's a bit of a question mark with sort of some of the recent inflation figures, but it doesn't look like they're going to sort of shoot up. But you still need to sort of plan for the worst, and having that cash flow is really important.
Absolutely. Any advice that you have before we close out for first home buyers buying in Brisbane right now?
Yeah, I think just being across some of those different schemes is pretty important. And like you said, it's confusing. So that's where we help out a lot of people. Just explore what you're eligible for, what's available. Buying a home with these schemes could be a lot closer than what you think. So definitely leverage the right team, mortgage broker, a buyer's agent, a solicitor, conveyancer, the people that are aware of the local rules, because it's different in Sydney, it's different in Melbourne, different states, different in different areas. So a local team definitely helps.
Yeah, it's amazing the amount of times we have conversations and that word comes up, that team, having the right people around you to help to avoid making those mistakes. I'm going to throw Melinda one here and just ask for 3 quick takeaways.
3 quick takeaways. Get expert advice, people that know how what government assistance is available to you, how you need to tap into it. So if you're unsure, reach out to Jayden and his team at Hunter Galloway. They'll be able to guide you through the process. Takeaway number 2, you need to understand the purpose of the first home. So, don't go chasing all of the government assistance just because it's available. Buy the right property for you at the right time. And if the assistance is available for that property that you're looking to buy, then absolutely chase down the assistance. Takeaway number 3, if you're going to go into a guarantor loan, be responsible about that, especially if you are the younger generation relying on the equity of family or friends in an older generation, because you don't want to impact on their retirement journey either. So they're probably my top 3 takeaways today.
And a top tip from Jayden, how do they get in touch with you? That's probably your tip. How do they get in touch with you guys to have a chat? Because I think it is really, really valuable, and I'd highly recommend people to get in touch to have a chat.
Yeah. Well, the good thing with our business, there's no cost for our service. So we get paid by the banks. So just hit us up at huntergalloway.com.au. Or check us out on Google.
And if you are a first home buyer, as Scott pointed out earlier, look up the Ultimate Guide to First Home Buyers, which is on that website. We may even include that link in the show notes below so that people can access that really easily.
Perfect. Mate, thank you very much for taking the time to have a chat. I'm sure our listeners, it's a first, as we said, that we've talked about the first home buyers, and I'm sure they got a lot of value out of that. As we've said, highly recommend getting in touch, learning a bit about it. It's a great way to start your journey into property and get ahead in life. So, Jayden, thanks very much for taking up the time to have a chat to us.
Appreciate it. Thanks for your time.
And as usual, I will let Melinda wrap it up. Thanks very much for listening again. More podcasts to come, more guests, more exciting information. And I'll let Melinda wrap it up and talk again next week. From me, thanks very much for listening, and bye for now.
Yes, thank you once again, everybody, for joining us on the Brisbane Property Podcast. As always, if you've enjoyed this episode, please share with friends and family. Don't forget to leave us a review and hit that subscribe button so more people can find our podcast and share in this content. As always, we hope you have a fabulous week, and we look forward to speaking with you again soon. Bye for now.